Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex.
Chicago soybeans. 30 weeks ago here, and at every opportunity since, I have said, and I quote, "The only other thing to bear in mind is not here on this daily chart, but in Chicago soybean meal." And that is the well highlighted annual key reversal down we saw here for 2023. Not directly related here, but not worth ignoring either. End of quote. 3 weeks ago I said, and I quote, "I think with us being now in the second month of the new year of 2025, that I should now set aside this as the world and my charts have moved on, and there are more recent and more interesting features to discuss." End of quote. Now, while I think this is still true, this original thought from the end of 2023, well, it still also haunts me today. Excuse me. Nevertheless, last week I highlighted a new view of what I thought was an earlier pattern, no longer a very large double bottom pattern, instead a July 2024 to date rectangle pattern, currently 951 to 1093, highlighted in bright pink on my daily chart. The top side for this pattern is still capped by the 50% Fibonacci line of the May to August 24 move at 1098 and the 61.8% absolute Fibonacci line at 1106. Separate to this, I brought up 2 weeks ago the idea of a February to date descending wedge pattern, which is highlighted in bright green on my daily chart. My comment from 2 weeks ago included, and I quote, "A break from this pattern when it comes would be very interesting, as if it were higher than the 50% and the 50% Fibonacci line and the 61.8% absolute Fibonacci line overhead would be under threat, whilst a break lower would run into the congestion seen mainly between mid-October 24 to mid-January 25 in the 1990 zone, assuming of course it pushes past the dark blue neckline extension, currently 1019 of the late July to late August reverse head and shoulders pattern." End of quote. Well, last week we had a break lower and prices dropped down to 991, easily within the influence of what I had said was and the quote, "the congestion seen mainly between the mid-October 24 to mid-January 25 in the 990 zone." End of quote. But then prices rose back up within the descending wedge pattern, though not repairing the pattern, and we've since dropped again this week and risen again up off the important 990 support. Is this descending pattern done? Have we a break lower or not? I'd have to say yes right now for the break lower, but the 990 support is worrisome for anyone looking on the downside. The primary target on the downside has already been achieved, as it wasn't too far below the break lower, down at 1011. However, the secondary hard to reach target X is down at 966, below the key 990 level and just above the purple uptrend, currently 958 of the 2019 to date uptrend, and the more recent pink August 24 to date uptrend, currently at 951. I think a lot will depend on whether the market managed to move above the dark blue neckline and back within the now thoroughly broken descending wedge pattern. Overall, we are still well within the large July 24 to date rectangle pattern right now. Chicago soybean meal. The main recent pattern driver here in this market had been and still is the dark blue May to October 2024 bearish shift pitchfork. The market is running for a third time at and just under the overhead upper time, currently at 309.10. This pattern had previously been breached on the upside in January, but it had not been broken, and it had then also been reinforced by a congestion area further overhead between 323.30 to 326.90, as well as a declining gold long moving average, currently 315.80. We had also recently seen what was the bearish presence of the mauve medium moving average, currently 301.90. However, this is now seemingly changing into possibly support. And we also have the nearby rising green short medium moving average, currently 307.20, but its impact has seemingly been lessened. Now, 4 weeks ago we saw prices drop down below the interesting bright green mid-December 2024 to early February 2025 lower bull channel line come lower trend line to an ascending wedge pattern, currently 320.70. And also the purple lopsided head and shoulders top pattern, currently 319.20. And as I said 2 weeks ago, and I quote, sets up some opportunities on the downside for an ascending wedge pattern. There's a primary target X down in the 293.80 zone and a secondary hard to reach target X1 down in the 265.60 zone. And for the head and shoulders top pattern, we have a primary target X2 down in the 293.30 zone and a secondary harder to reach target X3 down in the 280.10 zone. End of quote. I further added that, and I quote, looking at the targets, the primary targets X and X2 are doable, but still within the congestion seen back in April to August 2020 between 282 even to 300, and again most recently in November and December last year. However, the secondary targets for both are below this congestion and thus harder, much harder to attain. End of quote. Last week, upon reflection, I added an interim target X4 in the 285.30 zone below for the ascending wedge pattern. Well, last week we saw both target X and target X2 both achieved, followed by a reactionary move back up. This move back up created a weekly key reversal up, and this week, for most of the time, we have seen a reactionary pullback to this move, except for today when we have seen prices push up just over the dark blue upper time and the October 2021 low at 309.40. By doing so, we have over the last 2 weeks set up the opportunity for a possible 2-week-old bull flag, potential up as far as target X5 or just under it in the 315 even area. This is not a done deal and would very much depend on what happens today and tomorrow. Now, I said last week when discussing the weekly key reversal that if it was an up, then I would, and quote, most likely retire both secondary targets below as well as the new interim target, end of quote. Well, just for this week, I've kept all three still on my daily chart, but they are under notice, and that is for sure. Finally, this commentary would not be complete without my discussing the elephant in the room, or at least the elephant in the room which has stayed there throughout 2024, and also resonates now into 2025. And that's the annual key reversal seen here at the end of 2023. I said, and I'm afraid I have to repeat something I've highlighted now for 90 weeks, so coming up for nearly 2 years, and I quote, I now only need to remind you once again of my words when I pointed out that Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down. This duly came about at the end of 2023, and we have been living in the shadow of this pattern ever since. End of quote. I have also added ever since, and I quote, if there is only one thing to take away from my musings, let it have been those words. End of quote. These last few weeks have shown that the shadow cast by that supremely significant pattern so long ago still darkens the skyline of this market. Chicago soybean oil. A somewhat clearer chart this week than compared to last week. I've tempered the mid-August to late December 2024 dark blue bullish Andrews pitchfork, and I'm considering retiring it completely. Instead, the main pattern here is now the bright red, shallower bullish shift pitchfork for the same move. The market is right now not too far away from the bright red lower time below, currently at 40.34, sitting just on the congestion at 41.15, and under the overhead congestion of the May 24 low and April 24 low between 42.52 to 42.67 respectively. Now, as I've pointed out extensively in my video commentaries, the market has seemingly decided upon huge, large-scale June 2024 to date triple top, offsetting what could have been a huge June 2024 to February 2025 double bottom. What we have left after all this now is just the main pattern, the bright red shallow bullish shift pitchfork, for now at least.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.